Hey everyone, welcome back to the channel. Today I wanted to take a minute and talk about Alibaba. I recently just actually doubled my position in the company and wanted to kind of share a little bit about my thought process and why I've gone ahead and done that. Lately online there's been a lot of kind of questionable, everyone's kind of questioning it. Should you still be investing in it? Should you not? Because the stock price has actually gone down pretty significantly in recent wake of just kind of all of the stock market movement, and I think that's caused a lot of like fear and panic for a lot of people, but I don't think it's as big of a deal as a lot of people are making it out to be. So let me hop on over and show you kind of what I'm looking at and why I've decided to double my position here. So first, real quick, as I was just mentioning, the stock recently, right, if we just go to like a 5-day, even if we go to a 1 month, right, we've gone from 126 a share down to 86. So it's dropped 50%. If you look at the 6 month, right, it's been kind of all over the place. Year to date, year, similar trends. It's just been going down. I think there's a lot of reasons for this. I think there's a lot of legitimate reasons, a lot of fear around it being the VEI structure, the China risk. But even with all of that, I'll explain why I still think Alibaba is a great opportunity. And I guess what really prompted me to make this is I was on Reddit recently, and there's a lot of just kind of negative sentiment around it. And to me, that's kind of a good sign. That means a lot of people are tired of it. They're getting fed up with it. They're selling their positions. There's a lot more fear than there is excitement around the stock. So a lot of people, right, like buying BABA is pure speculation for 90% of you. Yeah, I mean, yes and no. And then here's a person saying they've closed out all their China stocks and why. And then here's one, just someone asking like, what's your take on Alibaba? So I think there's, a lot of interesting sentiment around it right now, but I think it still is actually a really good buy. So if we actually, this is my DCF model, I'll link it below. I have a video on this, me updating it. And I think it's a relatively conservative DCF. And so far, 9 months through 2022, it's actually held pretty true, my assumptions. So real quick, what I'll show you is if we jump over to the Q3 results here, I've just copied over their most recent. They give us the 9 month from 2021 and then 2022. So from a revenue growth perspective, that's 22.5% revenue growth 9 months through the year. My estimate is 19%. If we actually look at how that flows through on an EBITDA perspective, the overage here would be 20 billion RMB delta, right? So I do the same thing. So cost of revenue, growth, it's 35.4%. I don't care as much about growth actually for these ones. Let me delete that just to not confuse anyone. But as a percentage of revenue, it's 61.7%. I had an estimate of 58%, so obviously COGS are a little bit more expensive than anticipated. But even flowing through, it's only 26 billion impact RMB. Same thing for product development. It's actually coming in lighter. It's at 6.9% versus an 8%. That flows through at about a $7 billion positive impact EBITDA versus our model. Sales and marketing, similar story, but it's unfavorable here. So we can see 2.9% unfavorable, about an $18.8 billion RMB impact. And then G&A here, a lot of savings here, which is actually great to see, right? 3.8% versus our estimate of 8%. So 25.4 billion savings. So in total, all these items equate to about an $8 billion RMB favorable impact to EBITDA versus what our model shows. So our model's down here. Here's our assumptions in blue. And how everything's kind of calculated. You can watch the video to see, I think I go pretty in depth on how to calculate revenue, kind of going pretty granular. But I guess all this to say, what I really want to show is like, BABA, even with the risk, I think is a great company. So let's look at, this is all in RMB, but I get a $1.8 trillion RMB valuation, which at current exchange rates equates to a $288 billion valuation in USD. Now, the reason why I say this is great is if you look at the weighted average cost of capital I'm using 20%. I mean, that's ridiculous. Like, if you think about a private equity firm, what they're doing is they're going out and they're looking for companies that are kind of struggling on the verge of bankruptcy and need like an operational turnaround. And they're coming in and they're valuing these companies at a level where they can get about a 15% return for investors and feel comfortable with that. That's like a good 15% is a pretty solid, good return. Historically, it was higher in the 20s, but a lot of dry capital in the market, dry powder in the market, they look at like a 15% return. And if they think they can take a company that's like on the verge of bankruptcy, inject a lot of debt in it and turn it around and get a 15% return, like that's a good gamble for a private equity firm. This is a massive Chinese conglomerate that is, it's the Amazon of China. And if we can discount it at a 20% and still get a valuation higher than their current market cap, to me, this is like a no-brainer. I think this is a great opportunity. I think, there's risk for sure, but we have that adjusted for right here with our weighted average cost of capital. Right? If you threw like a US based like Amazon, like a 10% whack on here, you're gonna get a $760 billion valuation. Like that's just absurd. So yeah, I honestly, personally, I think this is kind of a no-brainer to go after. I think, long term, this will play out well. Do I think that this is going to turn around next week? No, absolutely not. I don't think as a value investor or an investor, you should be looking for those short-term swings. It might take 2 or 3 years to kind of discover valuations. It's going to take, the political uncertainty and with Russia, Ukraine, and the global world to kind of die down, and then it's going to take a little time to see how China kind of approaches the Taiwan aspect and all the regulatory sanctions on Russia, how all of that plays out. But yes, that is going to take time to play out before I think true price discovery will be discovered. But in the meantime, as long as Alibaba is continuing to hit their financial goals and grow, I think this is a great company. A couple things to note, though. I entered my first position, I think, when they were trading at about 109 a share. And then recently when it dropped down to 86 a share, I doubled my position. So I'm definitely bullish on this. So obviously take everything I'm saying with a grain of salt. Anyways, thanks for watching. I hope you found this interesting or useful, but thought I would just share my 2 cents on why I've doubled down on my position recently. My model's still holding up. I think my model is fairly conservative, right? Going from 40% growth down to 19. So I think Alibaba is continuing to trend in the right direction, and I think that value is there. It's just going to be a matter of time for politics to kind of play out in the world to settle down a little bit, I think. And I think Baba is going to be a great opportunity. And, it might even go a little bit lower. Maybe I'll double down again. We'll see. But anyways, thanks for tuning in. If you have any questions or comments, feel free to leave them below, and I'll get back to you.